Hi everyone, I'm Rakesh Maurya, COO of Ascension. Thanks for taking the time to look at this abridged version of our presentation introducing Ascension and its funds. Ascension is an early stage technology investor that's been in the market since 2015 when we launched our first SAIS fund. Last year, we were pleased to be awarded the UK Seed VC of the Year at the UK Business Angel Investment Awards. We also received a tax efficient review score of 86 for the last 2 years running, and MyCap have rated us as a top 10 EIS fund by track record, as well as having the best fee structure in the market. This presentation covers our Ascension EIS and the HMRC approved knowledge intensive variant of it as well. Our first knowledge intensive fund was launched in April 23 and was nearly fully deployed by Christmas 23. Please take a moment to hit pause and read the disclaimer. Ascension's intention is to be the fund of choice for both founders and investors. We believe by getting the best founders, we get the best businesses, and by getting the best businesses, we get the best returns for our investors. We have 16 team members dedicated to getting the portfolio from seed to Series A and beyond. We also have 17 venture partners that own a quarter of Ascension between them, and they have multiple $100 million and billion-dollar exits in their own names. Their track record is not included in this, and it's just the Ascension track record that we're talking about here. And then we have a rolling mentor network that helps businesses scale and grow. And we back this up with the kind of infrastructure that you'd expect from a large fund, with online application services, e-signatures, etc., hosting of all your EIS3, EIS5 contract notes on our online platform, as well as business investment relief services available as well. So we hold an offshore bank account with our custodian for any non-dom investors who wish to invest as well. Ascension's been supporting UK startups since 2015. We have 80 million under management and 12 recent exits. By exits, positive exits above cost. 8 of those were in 2022, and we have 150 businesses plus in the portfolio. So why do we think we're the fund of choice? First of all, as I mentioned, we've got this diverse and experienced team. There's 17 venture partners who put their money where their mouth is, having invested over £4 million into Ascension's fund since 2020. We talked about being loved by founders, and there are 2 measures we have for this. One is platform called Landscape VC, which is a sort of Glassdoor for venture capital. And we were in the top 10 VCs. We also have a sort of harder measure, which is we have over £1 million invested into Ascension's funds by our founders. So founders that have exited and taken some of those proceeds and put them back into the Ascension funds, or they are running later stage businesses where they're earning quite a lot of money and they're actually using Ascension for their tax efficient investing themselves. We're also trusted by institutions and individuals. And we have people like Nationwide Building Society in our funds. We're also supported by Aviva, Comet Relief, Big Society Capital, high net worth, family offices and foundations. We're experienced at doing it. As I said, we won the UK Seed VC of the Year last year, but also, we've been recognized in the industry for how active we are, with Bowhurst actually rating us as being the most active investor over the past decade. Ascension believes it's got a proprietary and unique recipe for deal flow. We've got a brand recognition in the market, as I mentioned earlier, some of the accolades that we've had. We've got our venture partners who are real beacons in the market. The former CEO of Expedia, the former chairman of the Jack Daniels Group, the former chief scientific officer and co-founder of Moderna. And one of our venture partners also sold their software SaaS business to a private equity group for $1.2 billion. They are beacons in the market for people to approach them when they're starting new businesses. And they say, if you want to talk to me about early stage UK investing, have a chat with Ascension. I talked about we try to grow a fantastic relationship with our founders, and they are incredibly useful when it comes to deal flow for us. It really is a startup ecosystem. They are co-working, competing, meeting other startups in this ecosystem all the time, and they can send us recommendations for businesses that we think we should look at. And then finally, we've got our wider community of people that we work with, upstream and downstream VCs, where we've invested with many of them, angel investors that we work with, all part of this network that we've grown over the last 7 to 8 years. And then that leads to us seeing about 3,000 deals per year, having 1,500 first conversations with potential investee businesses, and on average doing about 25 deals per year across all our funds. So our funds will build you a portfolio in each year. So an investor in either our SCIS or our EIS funds will get between 8 to 12 businesses in their portfolio to help them build a diverse portfolio. I could talk about our businesses forever, so I'll try to be brief here. If you want to learn more about the portfolio, you can go to ascension.vc/portfolio. One of my favorites that I talk about a lot is Epoch Biodesign, an enzyme that eats plastic at just above room temperature using fermentation. and turns it back into hydrocarbons for recycling. The fashion rental business that allows people to rent high-end fashion for a few nights, as well as something like Mealgae, which takes the waste product of the whiskey industry and turns it into fish food for the salmon farming industry. So just talked about the team. Kip's our chairman. Jean is our managing partner who exited his business to Virgin. Remy and Emma run the investment side, with Emma focusing on our impact side of our business and Remy running our tax efficient side of our business. Sonia is the non-exec director that we have. She's the chair of the Frog Capital Investment Committee as well, a current partner at the British Growth Fund as well. Here's a quick slide on the team. You can see it's quite a diverse mix, and the people here focus on both operations and investing. I'm going to move on to the track record now. So I'm just going to first touch on the current market dynamics. 21 and 22 were extremely abnormal years for the venture capital industry, extremely frothy with tough competition to get into rounds. We had later stage funds wanting to be early stage, US funds wanting to be UK and European funds, and a lot of those tourist VCs have left the market, and we're seeing it already, and we expect 2024 to be much more back to 2019, 2020 levels. With what's been happening in the world, we've also seen a lot of layoffs in the tech industry and people who have shares and share options worth significantly less than they were a few years ago. From our perspective, that means that there's an influx of highly skilled, highly technical and capable people coming to market to build new businesses. A lot of people, from an investor perspective, a lot of people will have been doing this kind of EIS investing for a number of years, and they may see some of the investments that they made prior to 2020, 21 have big uplifts in those years and now maybe be marked down from where they were, as well as investments that were made in 2021 maybe being either flat rounds or down rounds from the rounds that they were back then. Obviously, that can make investors feel slightly more nervous when it comes to investing. Our perspective is now is a great time to invest. You've got this new fundamental technology coming in with artificial intelligence. Question that we have is it going to be as big as the smartphone, the PC, or aeroplanes in terms of its impact on the world? But what we have here is investment levels more close to 1920, valuations closer to 1920, a new technology that's really helped disrupt things, and a new wave of entrepreneurs coming to market who can use that technology. So we think it's an exciting time to invest. Having said that, our track record, we believe, is still extremely strong. So if you look at our SEIS 15, 16, 18 funds, our EIS 17, 18, 19 funds have all started returning money back to investors. Those 3 SEIS funds that I mentioned, if you include tax reliefs, they've already returned investors their full amount of money when you include the tax release. EIS 17, breaking news, has now fully returned its money back to investors and still has another 3 times on the table in terms of paper value waiting to be realized over the next few years. Interestingly, even our Fair by Design institutional fund focused on reducing the cost of poverty, even that fund has nearly returned the first 2 years of fund back to its investors. And then on top of that, our fees are the best in market as rated by Tax Efficient Review. Here I've given a sample portfolio that you may have on panel, and you can see that Ascension compares extremely favorably to those, coupled with the strong track record that I just showed you one slide ago. So here are a little breakdown of some of the exits. We've had a 10x exits on 2 partial investments where we've taken 50% of the money out and returned to investors at a 10x return whilst leaving the rest in because we believe there's significant growth to come, as well as 6x, 4x and 5x returns to our EIS and SEIS investors. What do we look for when we invest? Ascension is a technology generalist investor, the way we put it. So we have a number of sectors that we focus on: commerce, deep tech, fintech, health tech, new work, next gen media, and sustainability. And we give a breakdown there of the mix of the EIS investments we've made in that space. But what we're looking for, well, we're early stage. So we're looking at the team. Do the founders have credibility, the right kind of experience? Do we believe that they're going to build the right kind of business? Also, do they have the right front of house and back of house capability? So can they build it? Can they sell it themselves and not rely on others? Is their product scalable? So, it doesn't have hideous implementation times, really long sales cycles, which make it very difficult to grow. Is the market size, is the total addressable market large? We're not looking to create a large player in a small pond. We want space for multiple players to be successful. Product market fit. Our businesses are going to be generally doing up to 40k a month in revenue from our EIS fund at the point that we invest. But in terms of product market fit, great founders, they go back to the businesses that they originally left and sell them the product to start with. The next thing is, what's your pipeline? What are the next 5 businesses? What are the next 10 businesses that you're going to sell to after that? Distribution. We really think it's the secret sauce in terms of how we invest, or how our businesses that we invest in should grow. There's a crazy stat that about 80% of venture capital money in the direct-to-consumer market ends up in Google and Facebook ads. So we tend not to invest in those businesses. Obviously, we do have some in our portfolio. The ones that we've chosen are ones where we think they've got a unique differentiation of doing it. So, for example, Thursday, the dating app, we invested before they actually launched their product, but we could see that they had built up hundreds of thousands of followers on Instagram organically before they went live, and that they had, they built this kind of unique distribution method for getting people in, was extremely effective. And then finally, the co-investors. Who are we investing with? Are they going to help the business grow? Are they just a check that's not going to really offer much value, or are they really going to help that business grow and scale? So finally, just to touch on the sort of basics of the fund itself. As I said, we target a 3 times return for our investors across the fund. We have a 130% performance fee hurdle. So on a fund level, a £100,000 investor has to be returned £130,000 before we take any performance fees at all. And our first EIS fund, the EIS 2017, is at 400% value and has returned all of its money back to investors, excluding tax relief. So the tax reliefs are on top. We've returned all the money back to the investors now. We have low, transparent and fully aligned fee structure, as I mentioned. We have a 5% upfront fee with 95% invested. And then we have a 1% annual management fee, which is only payable on realizations. If your portfolio doesn't return anything, we're not charging you anything as a fund. We expect all of our investments to have received advanced assurance before we go ahead and invest. And as I mentioned, we have a tax efficient review score of 86 for the last 2 years running, as well as being a top 10 track record firm as far as MyCap are concerned. So just to touch on the funds available for investment, we actually have 3 funds that invest all on the same thesis in the sectors below. We have our blended SEIS, which does first check into new businesses in this space. And then we have our EIS and KI variant, which invests in later stage businesses on the same thesis. And of course, we can have up to half of the businesses in our EIS and KI can be previous businesses invested in via our SEIS fund, which you've got first look at for follow-on funding rounds. So I hope that presentation was useful. If you have seen enough and you're ready to go and apply, you can go to ascension.vc/apply to do that. If you'd like to learn more, feel free to either give me an email on rakesh@ascension.vc, or you can call the office on 0207 183 8202, and we'd be more than happy to set up a session to talk to you about it. Thanks and have a great day.